Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on Friday, August 4th. My name is Ian Saunders. Miles, it's good to join you this
Yes,
week.
sir. Nice to be with you on this wonderful Thursday.
Yeah, it's been good. It's been a little bit since we were, I think, on the pod together. You've been a more frequent guest recently than me.
Yeah, it's been a couple months, I think, but it's nice to be with you here today.
Yeah, absolutely. It's nice to be here face to face, and nice to be taking a look at the market, but not necessarily nice movement on the market that we're seeing over the past couple days. I know we're coming in, at least at the time of this recording, and it's been a lot of back and forth movement on the S&P, the Nasdaq 100, this kind of areas so far today, right? We saw, time of this recording, we're looking at the S&P almost flat on the day, but it's had some interesting movement as we kicked off August. So, this is the first podcast we've done in the month of August, right? We just had July wrap up at the beginning of this week, and kind of diving into movement historically that we see in August is not quite the same as maybe the gains that we saw in July. Is that right?
That looks to be right in terms of the average for the month of August here. It's negative, not as good, like you mentioned, as July there, on average down a little bit. But the median returns, if you're looking for a little bit of a silver lining, the median returns are good, right?
Right. No, and I think that that's an important point to hit on too. You're looking at a piece, I think we'll put it in the report on Monday, right?
Yeah.
Looking at the median monthly returns for the S&P, but since 1928, 1957, if we're looking at the monthly returns since 1957, so a little more recent history, median returns are actually stronger for August than they were for July. However, if you look at the average returns, right, they're lower. They're some lower, actually negative for the month of August. But as you were kind of hitting on earlier, we see August has shown some pretty negative months. Now, most of those months haven't always been negative, typically just be a little bit more muted, right? But it's that potential for some of that sharper weakness that's kind of brought down some of those averages relative to the median.
Yes, looking at the kind of the spread, if you will, between the minimum for the month of August is down there at over negative 14.5%. That's the second worst month, following only, of course, October.
And that's an individual performance that we saw during the month of August.
Correct,
right?
not on average. Yep. Sorry for good clarification there. That in comparison to the maximum one individual month for August is only at 7.01, which isn't as great as some of the other ones, but nonetheless, that's where that kind of depressed average comes from in comparison to the median.
Right. And when you're looking at movement over the past couple of days, right? The time of this recording, we're only on August 3rd. We came into August with, what some might call a frothy S&P, right? You're looking at the S&P kind of touched up to that 4,600 level, kind of got into a potentially like extended territory, and seen a little bit of a pullback over the past couple of days. Is it just a pullback, or do you think it's something worse?
I think it's just a pullback.
Yeah.
We've been pounding the table, saying for a couple of weeks, if not months, saying that the market is overbought. And so to see a little bit of an exhale, I think that's an important thing to remember when you're looking at these brief pauses. It's healthy, right? You can't just have the market go up every single day, right? You have to have your brief pullbacks to build that overall constructive picture, which is what we're seeing across the board.
Yeah, it's just like it'd be great to have the market go up every day.
It would be, yeah.
But it wouldn't really lead to a lot of chart action. That's for sure. But we saw it touch that level. It's still, the default chart of the S&P, it's still sitting on, or is that 6 consecutive buy signals that it's been, and moved to a buy signal back in March, given 6 consecutive since that time, in a positive trend. Pulling back from overbought territory. It's up 17% year to date prior to movement today. It's really not a bad looking chart to see it kind of pull back from those levels. You got initial support that's going to be coming in at around the 43.40 mark, I believe, which is right below the midpoint on the trading band. And so you see, it's rare to see the market just continue to roar higher without seeing some kind of a pullback. Even just a 5% pullback,
right?
We tend to see a few of those each year. And we got that kind of pullback in March, and haven't gotten one since, right?
Right. It's just been running up in our face. And I think it's a decent time, if you've been kind of building a laundry list or shopping list of names that we've been saying, hey, wait for a pullback, dollar cost average in, wait for some trading band normalization. now might be a time to go kind of revisit some of those names. Of course, if they're still technically strong, that is, and fundamentally strong as well, but it might be a good time to look at some of those names and saying, hey, this might be what we can get. Let's go try to deploy some money, saying the overall picture is still strong.
So in looking at Miles, I think you had earlier this week in looking at some of the other just kind of bullish confirmation research, right? Looking at, we just had the S&P 500 go back to a buy signal against money market MNY MKT 13-week T-bills there, just on a 3.25% relative strength chart. It's a relationship that doesn't change all that frequently. A lot of, if you're just strictly following the signals behind the S&P or buying cash, depending upon those buys and sells, it's been a little rough because given some of the sharp V movements that we've seen recently, right? But looking at forward returns after we go back to a buy signal, I mean, it's not too bad.
No, it's not. And like you said, I want to focus in on, it's just really building that picture, right? You get a pullback, domestic equities moves up into number one. You see the buy signal for S&P 500 on a very specific chart against cash. So it's all just about building that picture, which is what we've really done. And the average returns, you know, for a year out, about online with the market, but I want to focus on the positive hit rate as well, right? Talking about an average positive hit rate when you get that buy signal across all time frames. And we can throw the chart on the screen for you right now. 1 week, 1 month, 3 months, 6 months, and 1 year. Your lowest positive hit rate percentage, so the amount of times over those time frames that you are in the green, 64%. The highest, 80%. Right. For those buy signals. So that's something else to kind of take a look at. Your returns are average, but your hit rate is strong.
Right. 6 month and a year out from those 25 instances. I mean, your percent positive is at 80%, 6 month and a year out. So I mean, it's just still showing that positive confirmation is a good thing, right? It's good to see these indicators continue to flip in conjunction with one another. I mean, I know we're seeing that you kind of went through some of the S&P movement. We had seen a little bit of that pullback has led to slightly more elevated volatility levels, right? I mean, we've gotten some pretty steady movement for the market throughout the past couple of weeks, and so seeing a couple down days, it's no surprising to see the VIX spike a little bit, right?
Yeah, and like you said, you know, you can't have it sit at 13 forever, right? That's pretty low. So you got to have a little bit of an uptick. But I mean, as you also mentioned before we jumped on, you know, it's pretty consistent. If we're talking about building that overall picture, a down and to the right action.
Yeah, looking at that 1 point chart of the VIX, right? I mean, you're still sitting on 3 consecutive sell signals. You've reversed back up with movement over the past 2 days to form a double top at the 17 level, but it's been very stair-step consistent movement lower, which we're still in. Even if it goes back to a buy signal for the VIX, right, at 18, you're still going to have overhead resistance with that bearish resistance line, which has really just kind of been steadily moving. So that'll be kind of an interesting point to monitor. That trend line would technically be violated if we get to the 20 mark. So that's going to be just on that 1 point chart, which is not the default, just for those that might be following along on the system. That 20 marks potentially kind of interesting to monitor. If we continue to see the VIX rally, that would be a point of potential contention to continue to look forward, moving forward as we head through August.
And I'll also mention, not only is that some resistance from, you know, from the stair stepping action we've seen, if you just kind of take a look back at 2022, that's really the lower bounds of the VIX for the majority of 2022, looking at and identifying some patterns.
Right. So you're seeing it. I mean, we kind of just bounced between that 20 and 35 level for most of 2022. Now we've been down beneath 20 really since May of this year, right? So that'll be some pretty interesting chart levels to monitor on that point moving forward. Miles, and I mean, everyone's hit on large caps a lot, right? I mean, it's what the Magnificent Seven, the S&P 500, cap weighted over equal weighted has been the story of the first 6 months of the year. We're starting to see what we've talked about a lot recently, strength broadening out across other areas of the market. I know we've hit on some different areas around small caps over the course of the past few weeks, but I think that small cap story is something that's just not going away. Right?
No, it's not. And it doesn't want to go away either. I mean, we can put the Russell 2000 up on the screen right now before we actually jump into the individual groups. We're taking a look here. We're jumping at a bunch of different scales. VIX on the 1 point, Russell 2000. We want to pull up the 40-point chart here. This one has really established a pretty much of a trading range in between, you know, around the mid 1600s to the upper bound of a nice even 2000. It's bounced off of that, or kind of moved off of that a little bit lower here recently, seeming to be an area of tough resistance. But if you do move past that, not only do you break a spread triple top by our classification, but you also move back into a positive trend. So kind of further upside confirmation for that small cap group. Something that we'd like to see is, you know what they say about small caps.
What this one?
They say that you like to see them go up.
You can say that about a lot of things, can't you?
Yeah.
But I think this in particular, I mean, but you're looking at small caps, whether it's growth or value. I mean, honestly, it's been kind of two areas to just kind of compare and contrast there. Looking at like Sparta small cap growth representative there from iShares, IWO. I mean, 4.38 fund score, pretty solid, up almost 16% year to date, pretty close to the S&P, up 17% year to date. I bet if you just asked someone off the street, they probably wouldn't say small cap growth is up the same as the S&P 500
Right.
so far this year. I mean, you're looking at 3 consecutive buy signals on that default chart, and seeing a little bit of some consolidation or price pullback, like the broader space, over the course of the past few days. But real consistent improvement really since kind of October-ish, September, October last year.
And a really nice base to work off of,
Right,
right? So a
right.
similar looking stair stepping pattern. We were just talking about it for the VIX going down, but like plenty of support below the middle of the trading band, bottom of the trading band, plenty of options and a strong base to work off of for that representative there.
Yeah. And I mean, shifting the other side of the coin, the value space. I mean, value has been a laggard across any size classification throughout the course of this year. And it still continues to lag from the longer term indicators. Yep. But I think the point that we're touching on here with some of the value space is we're seeing some of the near term move more positive, right? I mean, so looking at the Russell 2000 value ETF there, ticker IWN, a weaker 2.76 fund score. So not in the fours, not what we would consider a technically favorable fund, right? But what really interesting point for this, I think, is that the chart for IWN actually bottomed in May. It hit a multi-year bottom, lowest level we'd seen on this chart since late 2020 in May of this year, and has now bounced off that bottom, given 2 consecutive buy signals and moved back to a positive trend over the last 2 weeks of July, which is a pretty interesting near-term improvement to see from that space.
Oh yeah, I agree. And I'm just pulling here, clicking on my side. One thing I saw this morning when I was looking through, you've got, while you are kind of seeing a broad slight exhale, as we said, from the broad markets, SCAP, which is the positive trend indicator for the small cap universe, it is in lower field position at a 23% reading right now, but is within 1% of reversing back up into X's. So we are kind of seeing, with this increased participation from the value side of things, it's starting to creep over into some of the participation indicators and saying, hey, we're getting more upside interaction from the broad group.
Right. Yeah, that's definitely a kind of a good, that kind of, we talk about confirmation, right? Yeah. It's good to see that kind of confirmation. That type of indicator movement confirms some of the absolute pictures that we're seeing.
Yeah.
And I know that it's not something that we're just seeing on the small cap space, right? That kind of value growth, still seeing growth kind of favorably from the longer term, but it's kind of pervasive across other areas too.
Yep, it's true. I mean, we've seen from over the course of the last couple of weeks that value, the US large cap value score over on the asset class group scores page has picked up. Now seen in a chart reading of around 3.72. So the average large cap value fund around 3.72, pretty positive. But comparing that to the large cap growth fund has still a better score, as we've mentioned, right? But it's kind of stagnated around that 4.2 level. Can't go up forever, right? But nonetheless, it's, starting to see that dispersion dissipate.
Right. Which, I mean, seeing those come together, just because they're starting to come together doesn't mean they're ultimately going to flash in
right
path. But I mean, it's just, we talk about breadth, right? I mean, so looking at, it's good to see other areas, like you said, it's good to see other areas in the market go up.
Yes.
So, I mean, that's definitely something that we're gonna continue to monitor as we head toward the end of the summer.
Yeah, 2 areas, just a quick shout out: financials and energy. Those are going to be more of your value oriented names. Both of them have seen pretty swift upticks. How sustainable those are, you certainly can't say, but that's where a lot of that strength is coming from, at least by the way I read it.
Yeah, no, absolutely. I mean, saw a fair amount of interesting movement in the energy space. I think guys could really provide some tailwinds for that broader space.
Yes.
Looking through, I mean, we'll see if that near-term improvement from crude oil at least can continue to climb higher.
Yeah, plenty of resistance above, so maybe expect a pullback, but nonetheless, tailwind for the space, like you mentioned.
Yeah, absolutely. Well, I think as we are looking toward different areas of the market, you had a new kind of feature of the podcast that you wanted to hit on at the end. Is that right?
Yeah, this week for me, did you ever watch, the Come On Man section of the like kind of sports broadcasts and stuff?
Oh, yeah. Randy Moss.
Yes,
Yeah.
and they scream, "Come on, man." Well, listen, I'll tell you, my Come On Man stock for this week is going to be PayPal Holdings, PYPL. This one, if you look at it, 2 consecutive buy signals. It recently moved back into a positive trend, was a 1 for 5er, so I wasn't getting too hopeful. But as they were going into a rather important earnings call, they beat on both top and bottom line, but investors aren't buying it, right? They had some operating margin issues, and they also lost a couple of accounts, more than a couple, but investors aren't liking it. Down over 10% for today, ran into that steep resistance at the top of the trading band, broke past that kind of line in the sand I mentioned before in one of our morning calls at $66 or so, and is in jeopardy of losing its 1 technical attribute rating with a break of that bullish support line below here. So that's my PayPal. Come on, man.
That's the support line's holding in, at least for the time being there.
We'll see.
We'll see what happens with movement either into the close today or with movement over the next couple of days. But yeah, that's not you don't like to see that many O's printed in one day.
Yeah, certainly not.
So yeah, I had another chart I wanted to hit on as we try to land the plane here. Kind of look at an airline stock.
All
so
right.
I know you touched on last week Boeing in the kind of aerospace airline space. Another stock that kind of caught my eye, and honestly, a conversation with clients over the past few days, and looking at areas within that space and areas that were hit on a lot a few weeks ago that haven't been hit on quite as much recently. Delta Airlines, DAL, the ticker there. It's my airline of preference. So when traveling around, I definitely try to rack up the miles on Delta, and didn't want to go jumping into shares throughout most of the month of June, though, because it was just a straight column of X's up, right? I mean, you were looking at that thing going back to multi-year highs, matching some levels that we got back in April of 2021 up the chart level of 49. It's consolidated a little bit, given a sell signal earlier this week, right? On Tuesday, actually, this week, it was a sell signal down there at the 45 point. Taking a little bit lower, kind of closer to add another O, still creeping back towards the midpoint on that trading band. But as we do say a lot of times, the first sell signal, a strong uptrend, is not necessarily indicative of the broader weakness, right?
It's like a shakeout.
It could be. That's definitely the point. So that buy point on that shakeout pattern is gonna be, if it's a 3-box reversal higher. So for those that are following it, if you've been looking for a time to jump into a name like this, just set a chart alert on it. Reversal up in X's, it's your buy point on a shakeout pattern. Could be some points to touch on as we continue to try to fly around this fall, right?
You take any flights?
Not any coming up in the immediate future, taking a few week break, but that does bring up a good point that I do want to touch on, is that for those that are looking to take some flights this fall, we do have an opportunity for you to do so, to come out and join us actually in Las Vegas. So I do want to add this final thing. Both Miles and I will be out there. So we're going to be having our 2023 fall symposium is going to be out in Las Vegas, Nevada in mid-September. So September 14th and 15th are the main days there. It's going to be at the Resorts World. So it's a new hotel for us, a new hotel on the Strip. And so definitely going to be a great opportunity a lot of times to come out. And whether you're new to point and figure charting, great opportunity to learn. Whether you've been a seasoned veteran for 10 to 20 years, great opportunity to come and learn how other people might be applying the system differently, or what new aspects of the system might be out there. So whole research team will be out there for any that are interested and looking to come out for that. We still have signups open at this time. So just go ahead and give us a call, 804-320-8511. Shoot us an email, dwa@dorseywright.com, and we'll be more than happy to get you signed up in there.
Perfect. Can't say it better myself.
There we go. All right. Well, with that, Miles, I think we can go ahead and actually land the plane here now. So we'll go ahead and wrap up. Thanks to everyone for joining us here this week, and we look forward to talking with you again next week.